This is Making Money. So, got to go back and revisit yesterday because it's still casting a dark shadow. It was particularly an ugly session. I mean, this is yesterday, right? Every factor in the red. In fact, several deep in that red. You know, when they've got that sort of Hades type red in there, right? It reflects overall anxiety and angst that's stemming from a combination of factors, right? We know many of them are consistently with market psychology. For instance, the length of this rally. It's longer than your normal bull market leg. Market valuations, you hear guest after guest kind of complain about that. So those are your usual suspects. Anytime rallies wobble, people sort of look at those as being maybe the reason why. And then there are the concerns about the Federal Reserve, the next Fed chair, geopolitical uncertainty. Again, the same stuff you hear all the time, so you know that drill. But the epicenter for anxiety right now is the emergence of AI as a potential industry killer. So yesterday we got the latest victim. Trucking, logistics, stocks. Again, we started with software, financial services, real estate services, and man, this was amazing. These shares were absolutely annihilated yesterday. The AI industry killing theme is frightening because it strikes suddenly and without any warning. Now, most market participants are familiar with Adam Smith's concept of the invisible hand, right? Individuals pursuing their own self-interest in a free market, unintentionally promoting the general welfare of the entire society. Well, AI has become an invisible threat whose self-interest has begun to roil parts of the general welfare of society. In 1933, Universal Pictures released The Invisible Man. It was based on an H.G. Wells novel. Claude Rains, he was the masterful in his performance, and well, it became a national hit, a major hit around the world. And I'm not sure why Anthropic calls their AI product Claude, but you know, this one and all the other systems that are wreaking havoc and terror on the stock market, really much like Claude Rains did in The Invisible Man. I think maybe from now on we should just say an industry that gets hammered because of AI, we should just say it was Claude, because that's what's exactly happening. It's that frightening. Yesterday, for instance, Expediators International of Washington, all these other trucking logistic companies, they suffered their greatest one-day loss since the long-term capital management problem. That was back in 1998. Now remember, long-term capital management was this highly successful new hedge fund. It came out in 1994. It was the biggest names on Wall Street, academics who won Nobel Prizes. They were going to change the world. In fact, they did rewrite the playbook for a while. The first 3 years, they had gains of 21, 43, 41%. Then they ran into a bust, saw they lost billions of dollars in 1998 and had a cascading effect. Well, yesterday's sort of linchpin for the disaster for the trucking stocks was sparked by a company called Algorithm Holdings, which until recently was the singing machine. That's right, makers of karaoke machines. Now it's a transportation company. They say they're going to transform the industry. That's fine, good. The company made a series of announcements this week, and finally, the last one, I guess, caught Wall Street's attention. I will tell you this, I went last night and researched this company. They've got SEC filings that go all the way back to August of 1996. So it's been a whole bunch of different companies. Nevertheless, yesterday's news on the stock itself barely moved the stock. So think about this for a moment. If it was so revolutionary, this stock should have went up 4, 5, 6, 700%. You can see it's been much, much higher over the last 20, 30 years. So the bigger question then comes back to why is this happening and why is it happening right now? I think there are several reasons for the market's reaction to AI news. Hidden in the hysteria of these moves that cannot be explained really logically or fundamentally, but when these individual names start to move to maximum points of value. I'll give you an example. I think the underlying value proposition, it tells us what could happen if it ever comes to fruition. And I'll use the meme situation as an example. Meme darling Carvana traded close to zero not long ago. Then it rallied to above $300. Now remember, this was in the meme era. Everyone said this stock is crazy. It doesn't belong here. It cratered. I think it went to like $2. Wall Street, financial analysts, financial media, they danced on its grave. And then over the past year or so, the stock came back like a champ. In fact, it's somewhat ironic. Many of the same firms that issued sales on this and said it was a scam ended up putting buy recommendations on Carvana above $400 a share. In short, it lived up to the initial hype. Now, sometimes it takes longer than a couple of years to get back to levels that marks a company's potential. Remember, the stock market, these prices, they go up and down. Take, for instance, dot-com poster child, Cisco. It needed 25 years to get back to its March 27, 2000 peak. So we had a peak, we knew where it could go, and it finally went back there. This time, flip the script. Think about this, flip the script a little bit. 80% of software names are down right now, 30% or more. The market is signaling a potential worst case scenario. If all of this AI stuff becomes a legitimate rival, they're saying this is where these stocks can go. At the very least, eroding pricing power, eroding margins, it's going to hurt these stocks. But think about it like the meme stocks, right? Which most of them never reclaimed their highest price. A ton of these software names, where they are this week, will mark short-term bottoms. Another part of the story, of course, is market manipulation. Now, yesterday I did highlight this monster short position. Look at this, huge short position on these software names. So in addition to the selling pressure that naturally comes when you short this much of anything, I think that these are deep-pocketed investors with significant influences and channels to sort of stoke fear out there. And finally, the two most frequent letters in the alphabet right now, and certainly most frightening, are A and I. Companies have been harmed by AI and been helped, and companies that you would think were helped by AI, doesn't matter. If you've been harmed by it, your stock is down at least 29% this year. If you're an AI-enabled company, you say, you know, we did great because AI helped us bump the revenues. Wall Street doesn't care. You're down 20%. So the constructive way, in my mind, to use this week is to establish technical parameters, right? You know how low these names can go. You've got your bottoms there. That's great. Remember those, mark them down, and then start to try to find some diamonds in the rough. Yesterday reminded me also to that point of the book, The Mouse That Roared. Again, going back to this tiny fictional nation, it gets a hold of a bomb. They invade Manhattan with 3 soldiers. They find this bomb, and they really hold America at a standstill. So yesterday, this tiny penny stock knocked the stuffing out of the trucking industry, and by extension, the overall market.